Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us, and yesterday we got to see good amount of upside on the chart of gold right after NFP. Gold scores best daily gain in a month as US jobs data misses estimates. US stocks in lower after mixed job report. Yes, after NFP there was a drop on the chart of DXY, as a result of which we saw good amount of upside on the chart of gold. There was the job data was mixed. You can see here the largest daily percentage gain in a month after a weaker than expected increase in US non-farm payrolls for June cast doubt on the trajectory of interest rate hikes. US government data showed 209K new jobs were created in June, the smallest increase in more than 2.5 years and below the 240K analysts estimate. So there was a big drop on the chart of DXY. Dollar index was trading in a range, and that range is gone right now. Last close at 102.26. This was the last traded price. So the market opening will be very important, so that we can understand whether DXY will try to recover or the selling pressure will continue. Because during the last trading hours also, the selling pressure on DXY was extremely high. So the market opening will be very important. If the selling pressure on DXY continues, then 102 will be the next support or the last support for DXY. And I think DXY will give its best fight to protect the level of 102 here. And on the other hand, if DXY tries to recover also, do not consider it as a trend reversal or something like that, because of after this extreme selling pressure, okay, the sellers will enter again and they will try to push the market down again. Let's wait and watch how the market reacts after the market opening. And if you look at the economic calendar, this is forexfactory.com, and we can see that on Monday we don't have any news also. So overall, the present selling pressure will may remain in the market. So let's wait and watch. So let's talk about gold right now. Okay, so gold closed at 1925, and surprisingly, the previous high of 1935 worked. To be honest, this type of levels do not work after a big event. When market was extremely bullish, okay, I thought that gold would break everything and start flying. But when I saw that 1935 was working, I was quite shocked. But yes, it worked. Okay, many of you took sale also and you made money. But to be honest, I did not take any sell position. When I saw the data, I took a buy around 1922 and I exited around 1926. If you're watching the market on that time, probably you also observed that there was strong price rejection from above. Market came down to 1919, 1920 level. Okay, things were quite under pressure. So I exited around 1926, and again when gold went up, I did not enter again. But overall, there was some good upside. There was some extreme volatility. So many of you had to book loss also, and this is the main reason I always warn you guys that if you're a beginner, new trader, you should avoid news trading. Observe the market to gain experience only. Okay, so let's talk about the gold. So first of all, gold is trading in a range right now. I have discussed previously also that 1940 to 1950 and 1900, this is the range of gold right now. As we all know it very well, that in a sideways market or range bound market, buy at support and sell at resistance is the only strategy you should follow. But in this case, the problem is that 1940 to 1950 and 1900 are far away from each other. We have a difference of 400 to 500 pips here. So as a result, trading opportunities will be very less if we wait for 1940 to 50 and 1900 level. Anyways, in case market drops by Monday, Tuesday, market shows a sudden fall in the market, then obviously the first level or the first support on the chart of gold will be 1903 to 1900 level. This will be this is the only big support on the chart of gold right now, 1903 to 1900 level. Though market is standing at 1925, but we do not have any strong support on the chart of gold. In case there's a big drop, this is the only level you can expect to provide support to the market, 1903 to 1900 level. And in case market breaks this level, then we have 1893. Okay, so in case there is an extreme selling pressure, observe the market around 1903 1900 level. If you see market taking support, you can go for a buy. But on the other hand, if you see the market is forming big red candle at 1900 level, obviously we need to use our common sense, because it will be very clear to us that market will not be taking support. For taking support, we need price ejection from below. We need market showing intention that yes, buyers are present. So if market fails, then 1893 will be the next level. So these are the only two logical support levels on the chart right now. But as I said, these levels are far away from the current market price. So as a result, we need to focus on this particular portion of the market here. So right after the market opening, if you see the market is going up, if gold continues the upside, then again you can expect that gold will be facing selling pressure around 1935 again. Why 1935 again? Because around 1935 we have sellers present, and secondly, on Monday during the first half we do not see much volume in the market, much volatility in the market. Try to understand my point here. For a breakout or breakdown, to break any level, volume is extremely important. Without proper volume, market cannot go for a breakout or breakdown. So in case market hits 1935-36 level, observe the volume. If market acts like a typical Monday market, then you can expect that market will not be able to break it, and you can expect a selling pressure. If market reverses, if you see market struggling around this area, you can look for a sell position. Our level is 1935 to 1940. Previously 1935 was solo level, and 1937 1940 was another level, if you remember correctly. But right now we are considering it as a whole zone, because market has shown considerable price rejection around 1935 to 1940 altogether. Once you'll see the market is showing price rejection from above 1935, 36, 37, whatever it is, you can go for a sell position. You don't need to trade on 1 hour time frame. Simply switch to 15 minutes time frame and wait for the market to reverse, wait for the market to show price rejection from above. And your stop loss will be above 1940, around 1941, 42. Okay, so if market reverses from the resistance of 1935-40, this will be the selling position for us, because for breakout breakdown, volume is extremely important. On the other hand, in case market breaks 1940 level, okay, if market breaks 1940 level by the US session, in case market shows good amount of volume volatility by the US session, if you see that market is bullish, in that case you can expect market to break 1940, because usually during the European session and Asian session, volume is absent. US session X normal. So if market breaks 1940 level, you can go for a buy. You can expect a profit of around 50 to 60 pips. If you see that market is going up with good amount of buying power, go for a buy. Do not expect much. 50 to 60 pips is good enough, because 1950 will be the next resistance. 1950 will be the next resistance, because we have many contracts piled up around 1950, and moreover 1950 is also a round number. It's a psychological resistance. So on the chart of gold, we have 1935 to 1940 as the first resistance, and then we have 1950 as the second resistance. 1935 1940 is the most important level for the market right now. To come out of or to break the range here, market needs to cross 1935 1940. Clear? And let's talk about Fibonacci. That my videos are incomplete without Fibonacci. Okay, so If market goes up, we will look for sell position here. If market reverses according to expectation, then as I said, we have strong support here, but those levels are far away. So right after the market opening, if we see market going down or market showing a correction, then what to do? For that, we will be using Fibonacci. To understand this Fibonacci properly, let me take you to the 15 minutes time frame. See, this is the 15-minute chart of gold. So when gold made a high of 1935 yesterday and market started falling, you can see here market took support at FIBO 23.6% at least for 30 minutes. Okay, and at least a bounce. Okay, at least a bounce was seen for 25 to 30 pips. It means that market is more or less respecting Fibonacci. So this setup of Fibonacci work on a news market, which is a big thing. So as a result, if market shows downside, you can expect the same on Monday again, isn't it? So right after the market opening, if you see that gold is forming red candles, observe. Okay, observe gold around 1923. Let's make it a zone here, 1923 to 1921. This is the first Fibo level for Monday, that is Fibo 38.2, and then we have 1918 to 1919. Let me write it down. 1923 to 1921 will be the first Fibo level for Monday, which is Fibo 38.2, and also there was some price rejection. If the market shows small red candles, not much volatility, not much volume, but still the correction is continuing, take a buy around 1923-21. You can expect a profit of 30 pips. In case market breaks this level, your next level will be 1919 to 1918. This is the Fibo 50% retracement level, and the moving averages will also be present here. Around here also you can expect 30 to 40 pips if market takes support and bounces. The volatility of the market will be very, very important. If the market acts like a typical Monday market, we can expect the trade setups to work nicely. Let's wait and watch. Okay, and lastly we have 1950. 1950 is the strongest because we have price rejection from below. Also Fibo 61.8 is a better level, isn't it? So these are the trade opportunities on the chart of gold that I see right now. Hopefully you got my point. If you're a beginner, watch the video again because I have explained everything. So that's all from my side, my dear friends. Bye bye, take care, and as I always say, be a trader, not a gambler. Bye bye.